2025 Middle Income Down Payment Assistance, or MDPA program webinar. We would like to remind those who have joined us today that this webinar is intended only for bank members and representatives of community organizations. This event is not appropriate for homebuyers or the general public. Here is our agenda for today. First, we'll provide an introduction to the Federal Home Loan Bank of San Francisco. Then we'll give a summary of the MDPA program. We'll then talk about program participation and how members can get started. Next, we'll discuss the income eligibility requirement for households to qualify for MDPA funds. After that, we will discuss the disbursement process and the request for disbursement in detail. Then we'll move on to cover helpful reminders. Finally, we'll provide the answers to frequently asked questions. And then we will conclude our webinar with a live Q&A session. Introduction. The Federal Home Loan Bank system was chartered by Congress over 90 years ago during the Great Depression as a funding resource for home mortgage lenders. Today, lending institutions use federal home loan banks to help finance housing and economic development in their local communities. There are 11 federal home loan banks nationwide, and each operates as a private cooperative financial institution. We are a government-sponsored enterprise and are regulated by the Federal Housing Finance Agency, the same regulator of Fannie Mae and Freddie Mac. The Federal Home Loan Bank of San Francisco is a cooperative and is owned by member institutions headquartered in our district of Arizona, California, and Nevada. That means our member institutions are our shareholders and are also our customers. Our members include commercial banks, savings institutions, credit unions, insurance companies, as well as non-depository community development financial institutions, or CDFIs. While we are a privately held company, we do have a public service mission, and it is because of that public service mission that we provide a variety of products and services to help support and benefit our members and the communities that they serve. This graphic demonstrates the products and services we provide to our members, which include grant and credit programs. We offer support for affordable housing through the Affordable Housing Program, or AHP General Fund, and AHP Nevada Targeted Fund. We provide homeownership support through the AHP Set Aside Program, also known as WISH, the bank's down payment assistance program for eligible first-time homebuyers earning up to 80% of AMI. We also provide other discretionary programs, such as the Empowering Homeownership and, of course, the MDPA program. Additionally, we have ahead our Economic Development Grant Program, and we provide outreach and program education, such as today's webinar, to help educate and benefit our members and the communities they serve. You can go to our website to learn more about our programs. Next, I will provide a summary of the MDPA program. The Federal Home Loan Bank of San Francisco offers several voluntary programs to further address housing needs in the communities we serve in our tri-state district. The MDPA program is just one of the bank's voluntary, or also known as discretionary programs. The MDPA program provides matching grants to eligible first-time homebuyers. Grant funds may be used for down payment and closing costs. In May of 2023, the Federal Home Loan Bank of San Francisco launched a first-of-its-kind test pilot MDPA program with a $10 million allocation. After a successful start to the program, the funding for the MDPA program was doubled to $20 million in 2024 to help even more middle and low-income families and individuals purchase a home of their own. MDPA was designed to have a very streamlined documentation process. And thanks to the outpouring support of our participating member institutions, the MDPA program has become a highly anticipated and in-demand program, with all funding being quickly committed in the 2023 and 2024 program years. Since 2023, the bank has contributed $30 million through our participating member institutions to assist over 600 first-time homebuyers make their dreams of homeownership a reality. The Federal Home Loan Bank of San Francisco's Board of Directors approved a $10 million allocation for the 2025 MDPA program with a $1 million per member limit. For the 2025 program year, there are a few guidelines our member institutions should keep in mind. This year, the bank is making the entire $10 million program allocation available for eligible households earning just over 80%, up to 140% of AMI, by eliminating the $5 million program allocation carve-out for households earning between 120% and 140% AMI that was in place during the 2024 program year. New this year, all MDPA grants will be dispersed to member financial institutions on a reimbursement basis. Now, after reserving funds for a homebuyer in escrow, a participating member institution can submit a disbursement request to the bank after the homebuyer closes on a home purchase transaction. Members may submit disbursement requests for households on a first-come, first-served basis until the allocated funds have been exhausted. When funds begin to run low, the bank will send weekly updates to notify our participating members accordingly. The MDPA program provides matching grants to qualified first-time homebuyers. For a household to qualify for MDPA funds, they must have a minimum homebuyer contribution of $10,000, and they will be eligible for a grant up to $50,000. Homebuyer contribution can come from various sources. It may be household savings and may include gift funds from individuals outside the transaction. Also keep in mind that other assistance program grants or credit concessions from a party of the transaction, such as the seller or the lender, are allowed in the transaction, but they are not considered homebuyer contribution. The homebuyer must be a first-time homebuyer according to the bank's definition. This next bullet is especially important. The MDPA program is intended for middle-income households, and the program does have an income restriction. It is restricted to households that are earning just over 80%, up to 140% AMI. Please note that the AMI is based on the purchase property address. The homebuyer must also complete a home buying counseling program provided by an experienced organization. Finally, the purchase property must be the homebuyer's primary residence, and it must be located within the bank's district of Arizona, California, or Nevada. Next, let's talk about program participation. Who can participate in the MDPA program? Any member of the Federal Home Loan Bank of San Francisco that is in good standing may participate in the MDPA program. MDPA participation materials are now available on our website. In order to participate, members will need to submit only one form to the bank. A complete and signed secure portal workspace setup request form must be emailed to mdpa@FHLBSF.com. This form is found on our website in the MDPA Forms and Documents section. The member institution's designated portal users must review the portal user agreement prior to submitting the secure portal workspace setup request to the bank. Please note that a new secure portal workspace setup request is required even for members who participated in prior MDPA program cycles. You can visit our website and access all MDPA content by going to Products, Community Program Grants, and selecting MDPA. As mentioned a moment ago, MDPA participation materials are now available on our website, and you can find them under Forms and Documents. While we're here, I'd like to highlight an excellent resource available to support our members. The How to Upload MDPA Documents PDF provides guidance for members to successfully upload documents and avoid resubmission. Another excellent resource is the MDPA Disbursement Flowchart, which provides an overview of the program. We will review this together later in the presentation. And with that, I'll hand it off to Cindy.
Thanks, Amparo. In this part of the webinar, we will cover how a member determines household income eligibility, a critical step to confirm if a household is qualified for the MDPA grant. In order to determine household income eligibility, we must first determine the household income threshold limit, or the area median income, set by HUD. To arrive at the correct area median income, or AMI, for the household, there are 3 factors to consider. First, we must identify the location, specifically the MSA or Metropolitan Statistical Area, corresponding to the home buyer's purchase property address. The purchase property's MSA can be determined using the FFIEC website linked here in the slide. The second factor is the number of individuals in the household. Because income limits vary based on the household size, we must know the number of individuals in the household. Lastly, we need to make sure we use the correct year's HUD income limits that are valid at the time a homebuyer is qualified for the MDPA program. HUD income limits can be found on HUD's website, which is linked here in the slide. Currently, the 2024 income limits are the latest limits available, and so should be used until new limits are released. We expect HUD to release the 2025 income limits in spring. Now, let's look at an example together and calculate the HUD income limits for a household of 4 purchasing a home in the city of Sacramento. When you navigate to the HUD website linked in the previous slide, you will find an income limits table similar to what you see here. Note that we're using the 2024 income limits in this example, since these are the limits in effect at the time of this recording. First, we need to identify the MSA for the household. Remember, this is based on the purchase property address. The MSA for this household is Sacramento, Roseville, Arden, Arcade of California. The second step is to make sure we're looking at the column for the household size. Finally, we want to identify the very low income figure for a household of this size. HUD's definition of very low income is 50% of AMI, so we'll use this figure and multiply by 2 to determine the 100% AMI for the area. So in this example, we'll take the $58,950 times 2, resulting in $117,900 as the 100% AMI. To determine a household's income eligibility for the MDPA grant, we also need to know the household's annual income. Household income is based on the first mortgage lender's income calculation, typically available in the Fannie Mae Form 1008 or an equivalent document. In this example, we'll take the total monthly income of $11,550 multiplied by 12, resulting in $138,600 as the household annual income. Using the CDR Attachment 1 form, we can quickly calculate the household's income as a percentage of AMI. Enter the household annual income along with the 100% AMI we calculated earlier into the two corresponding fields on the form. Then we will see the household's income as a percentage of AMI automatically calculated in the field below. This percentage must be between 80.01% and 140% in order for the household to be eligible for the MDPA grant. As you can see, this household is within the range at 117.56% AMI, which indicates they are indeed income eligible for the grant. Now, let's go over how the grant disbursement process works at a high level. There are 5 milestones from income eligibility to reimbursement. The first step is to determine household income eligibility. A participating member must determine a household's income eligibility and confirm the homebuyer is in contract for a home purchase with loan closing scheduled within 30 days. A quick note for members working with community partners to identify eligible homebuyers in their local communities. It is the member's responsibility to determine income eligibility and reserve funds for the homebuyer, not the nonprofit organization or the housing counseling partners. Next, the member emails the bank to request program funds for the homebuyer and a designated homebuyer folder set up in the bank's secure portal. The member will receive a confirmation from the bank once funds have been reserved and the homebuyer folder setup is completed. At loan closing, the member provides the MDPA grant funds upfront to the escrow company for the benefit of the homebuyer. Within 30 days after loan closing, the member submits a complete disbursement request by uploading the required disbursement packet in the bank's secure portal and notifying the bank by email. Upon receipt of a complete and satisfactory disbursement packet, the bank approves the request and disburses the grant funds to the member's settlement transaction account. Our target is to disburse the grant funds to the member within 30 days of receiving the request. Once our bank reimburses the member, the disbursement request is closed and no follow-up is required. Members who have participated in the past may recall having to submit proof of disbursement to homebuyers as post-funding compliance. This is no longer required since our program has now changed to a reimbursement model in which members already fronted the grant at time of loan closing. Now that we have covered the entire disbursement process workflow, let's revisit 2 critical steps. Understanding these steps is vital to ensuring a smooth and successful disbursement process. For the homebuyer folder setup and funds reservation step, note that MDPA funds are reserved on a first-come, first-served basis until all funds in the program year are fully exhausted. Only participating member may request funds and a home buyer folder setup. A home buyer must have been income qualified by the member and has entered into a home purchase contract, with loan closing scheduled within 30 days. Funds, reservation, and home buyer folder setup requests must be emailed to our MDPA program mailbox at mdpa@fhlbsf.com. The email request should include the 5 items listed here: the home buyer's name, household income as a percentage of AMI, the subsidy amount, which is a maximum of $50,000 per household, the scheduled loan closing date, and the purchase property state, which can only be Arizona, California, or Nevada. If the home purchase transaction is canceled or closing is substantially delayed, please notify the bank promptly at the MDPA mailbox using the same email thread where the home buyer folder setup and funds reservation were confirmed. Now let's look at the disbursement request step in a little more detail. For the disbursement request, the member will submit to us a packet of 5 required documents within 30 days after loan closing. These required documents are all listed here on this slide. Before submission, members should ensure the home buyer and transaction information across the documents is consistent. Now let's review the first required document, MDPA's Certification and Disbursement Request, or CDR form. The MDPA CDR asks the member and the home buyer to certify that the disbursement request submitted meets all program requirements, and specifically, the form certifies the purchased property is located in Arizona, California, or Nevada. Note that this form requires certification and authorization signatures from both the home buyer and member institution. We recommend our members to obtain the home buyer's signature on the form prior to loan closing to avoid running into issue with getting it after the loan closes. As for the member's authorization, the signer must be an authorized signer on file with the Federal Home Loan Bank of San Francisco. This authorized signer may be a different individual than the member institution contact on the form. We also require the MDPA CDR Attachment 1 form. This is an Excel form, and we've just published a new version on our website. Please be sure to use the latest version, as the old version will no longer be accepted. On the top of the form, notice there's a progress bar to tell you when the form is 100% completed. The form must be 100% completed prior to submission. Since this form is a summary of the critical transaction details, please ensure the information on this form is accurate and consistent with the information found in the submitted documentation. As mentioned earlier, the home buyer must have successfully completed Homebuyer Counseling prior to loan closing to receive an MDPA grant. The Homebuyer Counseling program should be offered by an experienced organization that adopts the national industry standards for home ownership education and counseling. A valid certificate of completion is required and must be included in the disbursement request packet. Another form we require members to include in the disbursement request package is the Fannie Mae Form 1008. Let's review the information we look to confirm on this form. First, we must verify that the purchased property will be occupied by the home buyer and used as a primary residence. Second, we must verify the household's income eligibility. For the MDPA program, the bank will accept the income calculation the first mortgage lender used, and no separate calculation is required. The mortgage lender's Fannie Mae Form 1008 must be submitted to verify the homebuyer's income eligibility. Income qualification is based on the total borrower income in the Fannie Mae Form 1008 and the AMI adjusted for the household size. Lastly, we look to confirm the housing expense to income and debt to income ratios found on this form. Ultimately, our goal is to ensure that the mortgage loan is affordable to the MDPA assisted homebuyer and that they are set up for success in home ownership. One last reminder before moving on, the information reported on this form should be consistent with what's reported in the rest of the documentation. The last document required is a copy of the final closing disclosure for the home purchase transaction. There are a few key details we look for on this form. First, the homebuyer's contribution must be at least $10,000 and may come from savings or gifted funds. Second, the closing cost should be customary and reasonable. Third, the total grant amount must be evident. And finally, the amount of cash back to the homebuyer cannot be excessive. Now I'll hand it over to Bianca to review a few essential points about document submission.
Thanks, Cindy. Now, we will go over time limits for document submission. Document requests must be received by the bank within 30 days of the homebuyer's loan closing date. Any deficiency in documentation must be cured by the member within 60 days from the date the bank receives the disbursement request. To avoid any delays in review and reimbursement, it's important for members to respond to any requests in a timely manner. If the member does not comply with these deadlines, the bank reserves the right to decline the reimbursement of the MDPA grant to the member. Document submission. Members must submit program documents electronically via the bank's secure portal. It's critical to redact all personal identifying information, or PII, on any documents submitted to the bank. Members must redact the first 5 digits of any visible PII. For verification purposes, please ensure to redact only the first 5 digits and leave the last 4 digits of any social security numbers and bank account numbers. One final point I want to mention about document submission. On our website, we have a page of instructions to show you how to upload the documents to the bank's secure portal. If you have any questions on the process of uploading documents for an MDPA disbursement request, we highly encourage you to visit this page prior to submission. As a reminder, when an email is sent to the bank to request a homebuyer folder setup and reservation, we do our best to respond within 24 to 48 hours. But please note this is not an automated system. We must review and respond to each individual request individually. So we appreciate your patience during peak times such as now, during the start of the program year. Now, let's move on to funds disbursement process. The bank targets reimbursement to the member within 30 days of receiving a full and complete disbursement package. Members will receive a notification of the approved MDPA disbursement via email from mdpa@fhlbsf.com. The notification email will include the product name, the member financial institution, home buyer names, and the transaction amount. The bank disburses the MDPA grant funds directly to the member's settlement transaction account. Now, let's go over a few helpful reminders. Homebuyer folder setup or funds reservation requests are accepted on a first-come, first-served basis until program funds are fully exhausted. Reminder that the member should not request reservation of funds or a homebuyer folder setup until the homebuyer has been income qualified and is in escrow for a home purchase with closing scheduled within 30 days. Disbursement requests. A complete and satisfactory disbursement request package must be received by the bank within 30 days of the loan closing date. Reminder that members are required to notify the bank upon submission of a disbursement packet via email at mdpa@fhlbsf.com. Income eligibility. To be eligible for the MDPA program, household income must be between 80.01% to 140% HUD AMI. Again, the AMI is based on the MSA of the purchase property address. Cashback. Cashback to the homebuyer at closing is allowed, but the amount cannot be excessive. Non-arm's length transactions, such as homebuyers purchasing a home from their parents, are not eligible for the MDPA program. The certification and disbursement request form requires the homebuyer's signature. We strongly recommend the member obtains the homebuyer's signature before loan closing to avoid any issues with obtaining the required homebuyer's signature after the loan closes. Now, we will go over some frequently asked questions. How do you calculate a homebuyer's income? The bank relies on the income as reported on the Fannie Mae 1008 form. Members should use the income as reported on the Fannie Mae 1008 form to determine income eligibility. Typically, the bank does not require any additional backup documentation to be submitted. The Fannie Mae Form 1008 is sufficient. Are non-occupying co-borrowers allowed in MDPA? Transactions with non-occupying co-borrowers are not eligible for MDPA grant funds. How do you verify household members? The number of household members is reported by the member on the CDR Attachment 1 e-form. Non-borrowers who currently live with the borrower and who will live in the home being purchased, for example, a parent, should be factored into the household size. Members can determine how to verify the number of household members reported on the CDR Attachment 1. Are there retention requirements for MDPA? There are no retention requirements for this program. What is the maximum HTI or DTI allowable? While we do not have a benchmark, the transaction must be affordable and sustainable for the home buyer. The member can include any relevant notes in the underwriter comments section on the Fannie Mae 1008 form. Please note that Fannie Mae approval alone is not sufficient or an acceptable explanation. We are especially concerned about any households with an HTI in the mid-40s or higher. In these scenarios, members must provide any additional information or details to help us understand how your financial institution determined the transaction is affordable and sustainable. An example of an acceptable explanation could be that the homebuyer has sufficient savings or reserves, strong credit, and job stability. Are there any underwriting requirements? Aside from requiring the first mortgage to be affordable, sustainable, and reasonable, we do not usually have other specific requirements on the first mortgage loan. Member financial institutions are not required to originate the mortgage loan to participate in this program. Is manufactured housing eligible for MDPA? Manufactured housing is allowed, but it must be affixed to a foundation. In other words, it must be real property. Our website includes information on the types of properties eligible for the program. Could the homebuyer contribution include sweat equity? We have no objection to self-help transactions in the program. However, sweat equity does not count as homebuyer contribution. What documents require the homebuyer's signature? Only the Certification and Disbursement Request form requires the homebuyer's signature. We do not require a homebuyer's signature on the final closing disclosure. Must all co-borrowers be first-time homebuyers, or does only the primary borrower need to be a first-time homebuyer? All borrowers must be first-time homebuyers to be eligible for MDPA grant funds. The bank follows HUD's definition of a first-time homebuyer. How will members know if funds are still available for the MDPA program? The bank plans to begin sending a weekly email to all currently participating members as we approach the allocation.